Diane Olick had a great story just now about how people are seeking that income, those rental properties, buying the physical real estate without ever touching them. REITs are kind of like that for most investors.
Absolutely.
You buy a real estate investment trust share and it spins off cash and it gives you a dividend. It's one of the best performing sectors in the market turmoil so far. Why?
Well, right now there's a global search for yield. It's been a great scenario for REITs. Right now the dividend yield for REITs is 3.5%. So 250 basis point spread to the 10-year. That's wider than it has been historically. At the same time, we're expecting with REITs to deliver 4% earnings growth. So as long as the economy is holding up well and delivering jobs, this is a great scenario for REITs.
So it's been interesting because you can make a case that real estate is probably one of the 2 or 3 most levered sectors to the interest rate picture right now. If the downdraft continues, just how much can you expect to see REITs go higher? They've already been on such a huge run so far.
That can continue as long as the economy is holding up well. But when we're looking at REITs today, what is the impact, of course, with coronavirus and COVID-19? And that's when we start to looking at particular sectors that we're focused on. One sector that we like is the healthcare REIT sector. Healthcare REITs have outperformed during the last recession. This time around, we still have demographic tailwinds as far as an aging population and demand for healthcare facilities. But in particular, we like companies that own medical office facilities. So if there is a pandemic or an outbreak, there will be increased demand for medical office.
We're showing a couple of those right now. The health peak properties and health care, those 2 REITs are ones that you like.
Yep.
Is there a reason why those 2 in particular stand out to you?
Health Peak Properties, the other one's Healthcare Trust of America. They own medical office buildings. They have very strong balance sheets. A lot of these decisions are long-term decisions, as most real estate is in commercial real estate. So there's not going to be a lot of earnings volatility in the near term.
A consensus trade over the course of the last several years now has been REITs tied to technology, data centers, wireless towers, that sort of thing.
Yeah.
In an environment where the coronavirus keeps possibly more people at home or traveling less, do those types of REITs, real estate investment trusts, become more attractive as well?
Absolutely. There probably will not be any slowdown in demand for data. The coronavirus is not going to impact that at all. And if anything, as you mentioned, if people are working at home or staying at home for entertainment, watching Netflix rather than going to the movie theaters, you can make the case there will be increasing demand for data and data centers.
Now, as we talk about the real estate picture overall, most Americans, their biggest investment ever, if you want to look at it that way, is their home. What is the outlook, generally speaking, from a macro perspective for real estate on the residential side in your mind, given what's happening right now?
There has been a residential slowdown or residential shortage relative to the jobs produced over the past decade since the home crash 10 years ago. So residential has been a great sector within REITs. Apartment rental rates have been very strong as the economy has done well. In particular, though, we like the manufactured housing REITs because this is a subsector where the residents own their homes and they lease land from the REITs.
And what's your top pick in that sector?
We like Equity Lifestyle and Sun Communities, 2 of the real bellwethers in the sector.